Hey, welcome back everyone to the Black Brain Trust. This is episode 195. Here, my co-facilitator, Lionel. Lionel, can you hear us? I also have Complex Design as well.
Hey, good evening, everyone.
Can you hear Lionel?
I can only hear you. I haven't heard Lionel say anything.
Yeah, I think something may be going on with this. Please hit the like button as you come in. You'll see you have a lot of feedback. Share the video if possible. And there's a document description beneath the video for you to follow along with. Let me see. And we will get started. Hey, what's going on, Joe Black? We'll give Lionel 1 minute to get himself together.
Hello. Can you hear me?
Yeah, we can hear you now.
Okay. Yeah, I got a new mic. I was trying to test it out.
The floor is yours.
Okay. Say again.
The floor is yours.
Okay. All right. You want me to share my screen and everything?
Yeah.
Okay. Okay. Let me get into it. Okay. All right. The first topic on the docket we got from tonight is we're going to be going over the Binance hack. Oops, I ain't share my screen. All right. This comes from Binance's blog, Binance Security Breach Update. This happened 2 days ago. We have discovered a large-scale security breach today, May 7th. Hackers were able to obtain a large number of user API keys, 2FA codes, and potential other info. The hackers used a variety of techniques, including phishing, viruses, and other attacks. We are still concluding all possible methods used. There may also be additional affected accounts that have been identified yet, that have not been identified yet. The hackers were able to withdraw 7,000 BTC in this one transaction. This is the transaction they're referring to. As you all can see on the screen right now, the transactions went to a multitude of addresses. It wasn't just one large 7,000 BTC withdrawal. It was broken up into many hundreds of BTC going to other BTC addresses. The above transaction is the only affected transaction. It impacted our BTC hot wallet only, which contained about 2% of our total BTC holdings. All of our other wallets are secure and unharmed. The hackers had the patience to wait and execute well-orchestrated actions through multiple seemingly independent accounts at the most opportune time. The transaction is structured in a way that passed our existing security checks. It was unfortunate that we were not able to block this withdrawal before it was executed. Once executed, the withdrawal triggered various alarms in our system. We stopped all withdrawal immediately after that. Binance will use the Safety Fund to cover this incident in full. No user funds will be affected. We must conduct a thorough security review. The security review will include all parts of our system and data, which enlarge. We estimate this will take about 1 week. We will post updates frequently as possible. Most importantly, deposits and withdrawals will need to remain suspended during the period of time. We beg for your understanding in this difficult situation. We will continue to enable trading so that you may adjust your positions if you wish. Please also understand that the hackers may still control certain user accounts and may use those to influence prices in the meantime. We will monitor the situation closely, but we believe that with withdrawals disabled, there isn't much incentive for hackers to influence markets. In this difficult time, we strive to maintain transparency and would be appreciative of your support. All right. So, if you all have heard, this hack has happened a couple of days ago. Changping Zhao, or CZ, conducted the AMA, or Ask Me Anything, on his Twitter the day the news broke. He said all withdrawals and deposits were disabled for a week to give Binance some time to explore how deep the breach is. Trading is still active, as you heard from the article. He also advised anyone who has a Binance account to reset your 2FA codes. According to CZ, this hack does not cripple Binance. The Bitcoin that was stolen from Binance's hot wallet, which is a wallet that's connected to the internet, and not their cold wallet, which are wallets that are not connected to the internet. In order to cover the incident, Binance will use their SafeFu funds to cover the hack. Let me share my screen one more time for you all to understand what a SafeFu wallet is. A SafeFu. Hello?
I think over the last couple of weeks,
Wait,
we've been, we've been.
let me finish this real quick.
Oh, okay. Go ahead, Lionel.
A couple last year, it wasn't last year, but this is a particular one. But in July 4th, 2018, there was a few, July 4th, 2018, after some irregularities on Binance's site at the time, CZ made a tweet saying all funds were safe, but made a typo and spelled safe as SAFU, SAFU. Binance's marketing department got ahead of the typo and used it to create the acronym SAFU, which they then said stood for Secure Assets Fund for users. The SAFU fund takes 10% of all trades for rainy days, such as this hack. So they've been taking 10% of all transactions since July 4th of last year. In another article, which is the article I just put up on the screen, the article, which was dated August 34th, 2018, Binance pulled in 200 million in Q1 of 2018, surpassing Deutsche Bank, which pulled in only 146 million in that same time period. This is all to say that Binance does have the funds on hand in their SafeFu account to cover their losses of this hack. As one of the rules of crypto, as you all know, is not to keep your funds on an exchange. As soon as you make a transaction, immediately take your funds off the exchange. The hackers in this hack job targeted high net worth accounts, meaning people who still had large amounts of crypto in their accounts. In my opinion, it is my opinion that custody solutions will be highly requested from investors in the future because of hacks like this. Yes, in crypto, you can be your own bank, but people will be more comfortable letting institutions worry about and take hacking hits that personally be hacked. So this hack is unfortunate, but still, none of the crypto exchanges are infallible. They can be hacked. Binance is the whale of whales in terms of crypto exchanges, and they were hacked, but they did have safety precautions in place to limit the damage.
Lionel, I was just gonna say, like over the last 2 weeks, we actually have been talking about the importance of storing your cryptos offline. And I know, like, I think brothers like CR, Frank, a few other brothers in the chat have been also, kind of cluing people in as to what options you have for cold storage of your cryptocurrencies. But that was just the only point I wanted to make with regards to this. I gotta hop off because my phone's about to go dead. So I'm gonna try to join you guys in a bit.
Oh, my bad. My mic was muted. You got any comments on this, Mike?
Yeah, as somebody who works in cybersecurity, this is definitely a state-run attack. So whoever launched this operation, this was well planned. It was strategic, um, and they knew exactly what they were going after. So Binance saying that it's going to take them some time to do the forensics means that this was really, really bad. This is really bad. Most banks or financial institutions have some form of CIO or some form of operations, security operations set up for incidents like this. And what happens with, I'm sorry for my landline in the back going off. What happens with operations like this, it's so sophisticated that you have to bring in, maybe a third party, maybe somebody like CrowdStrike or maybe some other third party company that can actually help out with the investigation because uh, there's so much at stake here. Because if they can be compromised, who else can be compromised? Who else is next? Now, if you're the competition, if you're like Coinbase or somebody else, you're looking at this and saying, I'm glad it wasn't us, right? You're looking at those other guys and saying that's a case study for what we need not to do and what we need to do in the future to secure ourselves. So this is a really big thing, and I understand that it's an ongoing investigation, but this is really big. This isn't like somebody going onto your desktop and taking your digital wallet while you were sleeping. This is something that was a major exchange, and this is a black eye to the crypto industry because everybody says, oh, these Bitcoin's a Ponzi scheme and so on and so forth. In reality, it's really not so much that it's a Ponzi scheme, but uh, the misinformation can now be, it can be validated by this, right? So the fact that it can be breached is this adds on to the conspiracies.
Yeah, I agree with you. This is a black eye, and the best thing Binance can do is damage control, because there were other breaches, especially this year, of Cryptopia and the Quadriga CX, that entire situation, and those are still ongoing investigations. But the best thing Binance can do in this situation is to do major damage control. Let me share my screen again. All right, per that Binance hack, it reminds me of this article. This article was from last year, March 26, 2018, but it's still relevant today. It is OFC's Bitcoin blacklist could change crypto. With just one paragraph, an agency in the U.S. government may have just radically altered the dynamics of the cryptocurrency ecosystem. The Office of Foreign Asset Controls, or OFAC, announced on March 19th, which is last year, that it was considering including digital currency addresses associated with its list of persons and entities with whom U.S. persons and businesses are forbidden to transact business. In a new section of its website labeled Questions About Virtual Currency, OFAC noted that it may add digital currency addresses to the SDN list to alert the public of specific digital currency identifiers associated with a blocked person. The list of specially designated nationals, or SDNs, includes individuals and entities associated with sanctioned governments, terrorism, trafficking in weapons of mass destruction, and illegal drug trafficking. The list includes varying types of records, including, in some cases, only names, but in other cases, addresses of alias, etc. Financial institutions will be required to screen any virtual currency address provided for a transaction against a list to be provided by OFAC, and to either report, deny service to, or block transactions involving any listed addresses. The agency's FAQ also encourages reporting of addresses associated with listed individuals, which suggests that they intend to supplement the SDN, or the specially designated nationals, list on an ongoing basis. This brings up innumerable questions, a few of which we tackle below. I'm just going to read the questions. This is a long article. But the questions that this article talks about and brings up is who decides what addresses are added to the SDN list? What if a digital currency address is wrongfully associated with a blacklisted individual? What happens if you receive a transaction from a listed digital currency address? Suppose the OFAC wants to add to its SDN list any new addresses that interact with listed addresses. Does that mean that if a listed address, public address, sends a transaction to someone else and receives change, both the receipt address and change address could be added to the OFAC? What if a digital currency address listed is an address used by a third-party custody provider, i.e. a multi-sig wallet provider or a custodial exchange? All right, so like I said, the Binance hack made me think of this article. Excuse me, made me think of this article. Um, the, the hackers who hack Binance can have their Bitcoin address and any of the addresses that they send the stolen funds to, or who is associated with the stolen funds blacklisted by the OFAC, which is the Office of Foreign Assets. And I want you all to keep in mind that, please keep in mind that I have not heard of any enforcement of this rule as of now, but this situation is still being talked about in terms of blacklisting Bitcoin addresses. What this means is any Bitcoin address that receive any fraction, not just one entire whole Bitcoin, but any fraction of, not specifically Bitcoin, but it could be any cryptocurrency or virtual currency. Any fraction of Bitcoin funds can be blocked by exchanges and people from accepting funds from them. This can effectively sandbox the addresses and make the funds in them relatively worthless. Anyone who has quote unquote clean Bitcoin that accepts quote unquote dirty Bitcoin can run the chance of having their clean Bitcoin tainted by accepting the dirty Bitcoin. Um, this, in my opinion, is another reason why people would trust traditional exchanges, such as the traditional stock exchanges, the TD Ameritrade, the Fidelity, the E-Trade, even JP Morgan Chase, to do their trades, buy, sell, withdrawals, etc., from them because they would trust those traditional entities to have safety protocols in place to detect blacklisted addresses. So they would trust them to already have a protocol in place that would prevent them from getting their quote unquote clean crypto or virtual currencies mixed up with dirty crypto virtual currencies. Because of the transparent nature of Bitcoin, it's a transparent ledger. This can be easily implemented. In my opinion, this can quickly get out of hand because a lot of addresses can be made. So therefore, you can find yourself with a lot of addresses on the blacklist. But the cat and mouse game, I'm sure will be updates we made on part of the officials, but the onus will be on the people, such as you and I, retail investors, making these transactions to make sure to keep our addresses clean. Like I said again, I haven't heard of anyone. I I haven't heard of anyone enforcing these rules, but these kind of talks are going on. You got any comments on that one?
I don't actually.
All right. Okay, share my screen. Let's get to the next article. All right, the next article on the docket comes from Cointelegraph.com. NYAG, or the New York Attorney General, accusations filled with inaccuracy, says Bitfinex letter to users. Cryptocurrency exchange Bitfinex stated that the recent allegations by the New York Attorney General, or NYAG, about the exchange's insolvency are filled with inaccuracies and false accusations. The exchange made the claim in a letter seen by Cointelegraph emailed to Bitfinex users today, April 27th, which was a couple days ago. The letter was signed by the exchange's CEO, Jean-Louis van der Velde. The letter specifies that the materials brought against the exchange do not constitute a civil or criminal complaint and declares, and I quote, in particular, we want to assure you that the allegations that we have lost 850 million is categorically false, end quote. The exchange further explains that those funds are in fact seized and safeguarded in several jurisdictions, including Poland, Portugal, the United Kingdom, and the United States. Furthermore, the company also claims that it is actively working to cause those funds to be released and is confident that it can make convincing arguments to this end. Furthermore, Bitfinex noted, quote, and rest assured that we will vigorously challenge the false assertions made by the New York Attorney General's office in their filings, end quote. Lastly, Velde claims that the exchange is working closely with regulators worldwide and encourages users to address remaining questions to him or other senior staff members. As Cointelegraph reported earlier today, two Bitfinex shareholders said that they are not distressed by the New York Attorney General's allegations against the exchange. The firm's chief financial officer reportedly told another shareholder that needs a few weeks and the funds will be unfrozen. Blockchain data shows that earlier this week, the exchange had also withdrawn funds from almost 90 million from its cold wallets. All right. If you all don't know Bitfinex, Tether is on the Bitfinex exchange. Bitfinex is the exchange that released Tether. And we covered this last week also, but to give a refresh, during the 2017 bull run, it was saw and reported that Bitfinex printed Tether. And with the Tether they printed, they bought Bitcoin. For those who don't know that are listening, Tether is a stable coin, meaning it's tied to the US dollar. It's always going to be at or around $1. It'll fluctuate between 97 cents, and the highest I've seen it was $1.04. So mainly it'll be around $1. But because Tether is a stable coin, they printed Tether mainly. So you can also say they printed dollars. They printed money and then bought Bitcoin with it. And people say because of them doing that, and they printed billions. This is not just a few 100,000. They printed billions, and they bought Bitcoin because of that. That rose the Bitcoin price. For the past few months, Tether has been taking Tether off the books, if you would say, burning Tether. And it's been seen or said that Tether Bitfinex, I apologize, Bitfinex has 850 million in debt, so, or missing. And then now, last week we went over that the NYAG, New York Attorney General's office, has been trying to go at Bitfinex to see their reports, to see their internal books, to see where this money has gone, to see what's going on. So this is the current information that we have on this situation right now. Have any comments on this, Mike?
No, I don't have any comments on this one.
All right. Let me get to this one. These next few articles are around the same. Excuse me. These next few articles are discussing the same topics. The New York Attorney General's office has requested that Bitfinex release documents, and this is pertaining to what I really was just said, but I'm just reading in the prose form per this article, related to its dealings with Tether as part of the ongoing legal case. According to a memorandum of law filed on May 3rd, the New York State, I'm just going to say NYAG, Letitia James has issued a request for the disclosure of documents requiring the alleged deal between Bitfinex and Tether. Earlier last week, the cryptocurrency exchange Bitfinex was accused of using 850 million in Tether funds to cover losses. Again, they printed Tether or printed money because Tether is a stable coin. They just printed dollars to cover their losses. Obviously, as you can guess, that this is illegal. They were supposedly held in reserve to back the value of the stablecoin USDT. The move prompted the NYAG's office to file a case against both Bitfinex and Tether, alleging the two had acted to defend and defraud investors to manipulate the marketplace of cryptocurrency. The most recent memorandum requesting that Bitfinex be forced to release documents concerning the 850 million deal claims that both parties misled their clients and investors, stating, and I quote, while that and other discrepancies do not change the core issues in the case, they only heighten the OAG's need to obtain documents and information in a timely, organized fashion so that the OAG may understand that what has taken place and what continues to take place at these companies, end quote. The filing also includes a section that attempts to bar Bitfinex from using any more of Tether funds that are backing the USDT coin, claiming to have, quote, craft a narrow injunction to preserve the status quo and prevent respondents from further dissipation that cash reserves that supposedly back the Tether virtual currency, pending completion of the OAG's investigation, end quote. Last week, following the accusations made by the New York NYAG's office, Bitfinex and Tether released a joint statement denying the allegations has been blown out of proportion. In addition, the companies attempted to position themselves as the victims of the case, claiming that NYAG was interfering with efforts to recover client funds. The most recent memorandum filing by the NYAG addressed such a situation, stating that the ongoing case had in now no way prevented Bitfinex and Tether from operating their business in the normal course as they have continued to do since the injunction. The case has raised massive interest in the community and investment base of cryptocurrency, particularly following years of inquiries into Tether's exact reserve backing of USDT, while the price of the stablecoins has maintained its $1 price point. The community of cryptocurrency is frustrated by the actions of a company that historically positioned itself as offering a currency backed one to one with US dollars. Instead, Tether and its lawyers revealed earlier in the week that the currency was only backed 74% by cash and cash equivalents, with the remainder coverable by credit lines. While Tether attempted to position this with a win for the company, thereby exonerating the value of each USDT token, some feel that the company misled users over the exact backing of the coin and question whether Tether should be considered stable after all. CoinFlip, one of the world's leading cryptocurrency ATM providers, responded to the ongoing situation by delaying its planned integration of Tether later this year. This 74% backing on Tether's website, this is the actual this is was changed about a month ago, where they saying that the Tether is actually backed 74% by cash and cash equivalents, meaning the cash they have on hand, that and that the remainder is covered by other assets, and IOUs basically. And to go into I'll do Coinbase for you all. I mean, not Coinbase, Coin Market Cap. To go to Coin Market Cap, Tether is the seventh largest by Coin Market Cap, and actually their 24-hour volume right here is about 13 billion. And as you can see, Bitcoin's 24-hour volume is 16 billion, but the top cryptos such as Ethereum, XRP, Ethereum is 6 billion, XRP is in the high millions, Bitcoin Cash is 1 billion, Litecoin Cash is 2 billion. So the revolution of money going in and out of Tether is a lot compared to other. I think it's only second to Bitcoin. So there's still a lot of people using Tether. There's still a lot of people trusting Tether. Me personally, what I would do, I'm not telling what you are, what you should do, what I would do, I would not touch Tether because of the controversy that's going on around Tether. That's what I would do. We don't know if Tether is used to get out of a crypto that's going down to save your gains, but we don't know when Tether will disappear. So me, I would not touch Tether. You have anything to say about this, Mike?
I don't have any comments on this one, but what I will say is about cryptos in general. I think what's going to happen is there's going to have to be some sort of protection measures in place, similar to how you have traditional banks, brick and mortar, where they have vaults, they have all these sort of protection mechanisms in place, and to keep bad guys from coming in and just walking into a institution and taking all the money out. With that being said, there's quite a few areas that can actually be implemented from a security standpoint or cybersecurity standpoint. They can actually put intrusion detection, IDS and IPS, which is intrusion protection. So you can actually add those two agents, either agent base or agent list, onto a blockchain if need be, and to an exchange. And for an exchange, you can actually add a firewall uh, through Linux using IP tables. So there's a lot of ways that they can go about this. Why they have not done any of this, I really can't explain it because I don't understand what their infrastructure looks like for the crypto market. Why it's so lackadaisical. I mean, we're hearing about every single season or every quarter, we're hearing about a new breach of an exchange. Um, Somebody in the chat mentioned Coinbase got breached as well. I guess some time ago. This seems to be an ongoing thing for crypto exchanges, and it makes people very concerned about where where the assurances are for where they put their money.
Yeah, and I agree with you. And this is one of the reasons why I think the cryptocurrency market is not ready for a quote unquote bull run, because there's no, like you said, insurance is in place. When there's a bull run, you are at that time, there's money to be made, there's money liquid in the market, there's money flowing in and out. You're really going to have an influx of scams. You're really going to have an influx of hackings. You see these smaller crypto exchanges, and there are a lot of them that don't have the height of secure, such as Binance. And Binance is the big dog, it's the whale in the ocean. It's, one of the only whales in the, well, a few whales in the ocean, and they get hacked. So that's why I say the crypto market isn't ready for a quote unquote bull run. And also, I always say, and I'm going to continue to beat this drum, that regular investors and even institutional investors are not comfortable with keeping their money on these at crypto exchanges. They'll be comfortable keeping their money on the Fidelities, the Charles Schwabs, the TD Ameritrade, the JP Morgan Chase, the E-Trades, and so forth and so forth, because they're comfortable with them. They've been around for years, and they know, in my opinion, this is only my opinion, if those they're going to have a custody solution, which means they're going to keep funds in a cold storage away from that institution. If those places get hacked, then they know that they're more likely to be refunded, such as Coinbase. Coinbase, we covered an article a few weeks ago where Coinbase has gotten insured by, I forgot the name of the insurance place, but it's a famous insurance place. So that's why I say, the cryptocurrency market isn't ready for a bull run, because it's still somewhat in the wild wild west territory. All right, let me go ahead and share my screen again. All right, this is the last one concerning Bitfinex, and this is somewhat of a funny one. Bitfinex confirms the initial exchange offering to raise up to $1 billion in Tether. Embattled cryptocurrency exchange Bitfinex confirmed it will conduct a $1 billion so-called initial exchange offering or IEO and a white paper issued on May 8th. Bitfinex, which faces ongoing legal scrutiny from authorities who accuse it of losing $850 million, had hinted it would seek to sell its own tokens earlier this month. The release of a formal white paper reveals few changes from the original rumors of the sale of up to 1 billion LEO tokens, each worth one tether, lasting until May 11th. Investors will be able to use the tokens for various on-exchange activities, while Bitfinex, if the entire supply is sold, will plug the gap left by the missing funds. May 11 will mark the cutoff point for sales of private investors, while the public phase may begin afterwards. If few, if fewer than 1 billion USDT tokens are sold by private token sale, the issuer may thereafter sell remaining tokens at times and in a manner it deems appropriate and its sole discretion, consistent with applicable law, the white paper confirms. iFinex, the parent company of Bitfinex and Tether, continues to contest the legal allegations in a United States court, with a judge on Monday partly siding with the co-defendants. IEOs are becoming slowly more popular among exchanges in 2019, with platforms eager to keep token sales in-house and increase control of the price of the process. As Cointelegraph reported, the first IEO began in April, while previously controversy arose over plans by exchange Bogogo to conduct a sale involving IOUs for a third-party token, which did not in fact exist. So Bitfinex is confirming an initial exchange offering to raise 1 billion. In my opinion, if you are saying that the allegations brought against you by the New York Attorney General office and other people are incorrect and they're lying and so forth, and you're telling your investors, hey, don't believe them, they're just trying to create FUD or whatever the case may be, then why are you trying to conduct a $1 billion initial exchange offering or IEO to raise $1 billion to cover the 850 million that's lost? These things don't make sense, and that's why I say, in my opinion, that I would not touch Tether, because we don't know when you're going to wake up and say, hey, Tether is, these exchanges will say, hey, Tether, we don't use Tether on our exchange anymore, and the only place you can use Tether is on not on Bitfinex. When I say Bitfinex, I think Bitfinex. Um, then now you're pigeon-toed. Now you beholden to that single exchange where you can use your Tether, and that exchange may not have the assets that you want. So that's just me, in my opinion, and I feel that that is weird. You got any comments on that one?
No.
All right, all right. Let's switch gears from the controversy to the adoption. This one comes from Bitcoiners.com. Title: Fidelity Research finds increasing institutional interest in cryptocurrency. A research survey commissioned by Fidelity Investments and conducted by Greenwich Associates has shown that close up to 50% of institutional investors believe that cryptocurrency and digital assets in general are worthy investment class. Digital assets are a viable investment. Fidelity Digital Assets released the results of the survey in a Medium post published on Thursday, May 2nd, 2019. According to the post, about 70% of the survey participants expressed positive sentiments about cryptocurrency. Of the 441 institutional investors that participated in the study, about 47% considered digital assets to be an innovative play. About 40% also identified the low correlation of digital assets with the mainstream market as one of the major plus points of the emerging asset class. I see what's funny about this is you have 4 points that this circulators pointing out. It says high potential upside. Only 27% believe it has high potential upside. I probably just found that funny. Since 2018, there has been a significant upswing in institutional involvement in cryptocurrency investments. University endowment funds and U.S. public pension funds have taken up investment positions in digital assets. The survey also showed that family offices and financial advisors had the biggest interest in digital assets. As previously reported by Bitcoiners, Grayscale Investments posted record investment earnings in 2018 with institutional investors reportedly consolidating their strategic position in the market. An excerpt from the survey report reads, and I quote, even more compelling is how the range of intermediaries has evolved. We began fielding interest from crypto funds and other early movers over the past several months. We're seeing interest among family offices, endowments, pensions, and foundations. Cryptocurrency, alternative or independent asset class. The Fidelity survey also highlighted an emerging split in the investment philosophy and big money players interested in incorporating cryptocurrencies as part of their investing portfolios. About 32% of such respondents see digital assets as an alternative asset class, while 15% prefer cryptocurrency as an independent asset class. The need for robust custodial solutions, I'll repeat that again. The need for robust custodial solutions, however, a general theme for the majority of the survey participants. About 76% of the institutions involved in the survey identified security protocols as the most important parameter for cryptocurrency custody. Exchange platforms across the market continue to fall victims to hacks with almost 1 billion stolen in 2018 alone. Right now, we only seen, well, with the Binance hack that accrued about $40.5 billion. In an interview with Bloomberg, Tom Jessup, president of Fidelity Digital Assets, declared that big money players will prefer trusted custodians to cryptocurrency startups offering custodial services. I said that just in our last point, our last article. According to Jessup, and I quote, people are relying on the institutions they've done business with for a long time to fulfill their objectives and needs. I'm not trying to throw shade on anybody else, but it's up to the clients to decide, end quote. Now, this article is pointing out several topics, several points that I talked about in the last article, and I do wholeheartedly agree that everybody is not up to going on an exchange, a crypto exchange, putting in some alphanumeric numbers and making a trade or sell, or therefore a lot of people are not up to that. A lot of people are not down with that. So they see these other big institutions that are already here and have already been here for 100 or close to or even over 100 years and are comfortable with doing business with them. And they know that if something goes wrong, they will be reimbursed through fiat. With these exchanges, as you can see with Binance, you may not have that luxury. Now, excuse me, there's a paragraph here that said the survey also showed that family offices, financial advisors have the biggest interest in digital assets. As previously reported by Bitcoiners, Grayscale Investments posted record investment earnings in 2018 with institutional investors reportedly consolidating their strategic positions in the market. Now, Grayscale Investments, and this is just through my research, Grayscale Investments is an investment firm where they have investment products. Some of their investment products include Bitcoin Trust, Bitcoin Cash Trust, Ethereum Trust, and so forth. Out of all these trusts, only two are, only get that back here. Only two are available for retail investors like you and me. Everything else is available for only available for institutional investors. The only two that are available for retail investors such as you as me are the Grayscale Bitcoin Trust, which you can see here on the screen right now, and the Ethereum Classic Trust. Those are the only two that are available for retail investors such as you and me. Grayscale holds 1% of all Bitcoin. They physically hold 1% of all Bitcoin. So Fidelity really did their research in this, um, uh, well, research in this paper. And it also points out that university endowments and U.S. public pensions. And they also said that they have been fielding a lot of new interest in family offices, such as if you know what a family office is, you could say a rich family, endowments, pensions, and foundations. So a lot of institutions are getting into this game. We already know that Fidelity is already into it, which is this is their research. And we already know that JP Morgan Chase, even though that Jamie Dimon says anything and everything about crypto. Hello, am I still on?
Yeah, you're still on. You're still on.
Okay. Even though Jamie Dimon, which is the CEO of JP Morgan Chase, he says what he says about crypto, but in the back, he is for crypto. We also know that TD Ameritrade is starting their crypto desk, and we've recently heard E-Trade talk about they are getting into it, and they're getting into it by first offering Bitcoin futures. So institutions are getting into it, and it seems like the people that crypto is made for are not getting into it, and those are the people that need to get into it the most. You got any comments on this one?
Well, yeah, Fidelity's a whale. It's not a super whale, so they're going to be involved in that anyways. Although they're going to take a calculated approach, they were bound to get involved in it. Any super whale is going to be involved in this. So let them play it out for the most part, and then everybody at the bottom, the yuppies and whatnot, are gonna the minnows are gonna try to figure it out for themselves. You just can't go up against institutional powers like that. So
Right. And Fidelity has 7.2 trillion, not billion, not million, trillion in under management. So that Fidelity is a whale. Fidelity is the whale of whales, and they're getting into it.
they're the largest fintech in the market.
Right. Right. And they're getting into crypto. So
Just as a FYI, we are not certified financial planners. If you want a certified financial planner, go to cfp.net.
correct. All right, next topic on the docket. And after I read this, I'm gonna need I have to get some water. Give me about 2 minutes after I go through this one. Fidelity Investment surveyed 22% of institutional investors own digital assets. So the other article said that a lot of institutional investors are interested in crypto assets. This one's saying that 22% of institutional investors own digital assets. United States-based asset management firm Fidelity Investments released the result of a survey showing that 22% of institutional investors already own digital assets in a press release published on May 2nd. The release claims that the firm surveyed 411 U.S. institutional investors, among which 40% respondents said that they are open to future investments in digital assets in the next 5 years. Furthermore, almost half, 47% of respondents said that they see a place for digital assets in their investment portfolios. Most investors, 72%, prefer to buy crypto investment products, while 57% prefer to buy crypto assets directly, and another 57% prefer to buy an investment product that holds digital asset companies. Tom Jessup, president of Fidelity Digital Assets, commented on the findings. I quote, we've seen a maturation of interest in digital assets from early adopters like crypto hedge funds to traditional institutional investors like family offices and endowments, end quote. When it comes to the reason behind their interest in digital assets, 46% of respondents Find the low correlation to other assets to be crypto's most appealing characteristics. Financial advisors, 74% of family offices, 80% reportedly view the features of digital assets most favorably. On the other hand, unclear regulation, volatility, limited track record, and lack of fundamentals were cited among the obstacles in investing in digital assets. As Cointelegraph reported earlier this week, a former executive of British investment bank Barclays, Chris Tyrer, has joined Fidelity Digital Assets, the crypto platform of Fidelity Investments. On the same day, a different survey found that 11% of the American population owns the major cryptocurrency Bitcoin. Now, there's two paragraphs I want to highlight here. This first one, which reads, and I'll reread it. Most investors, 72%, prefer. Let me reread that. 72% of investors prefer to buy crypto investment products, while 57% prefer to buy crypto assets directly, and another 57% prefer to buy an investment product that holds digital asset companies. So, also we have this other paragraph right here. I'm going to highlight it for you all, for those that are reading on the screen. All right. When it comes to the reason behind their interest in digital assets, 46% of respondents find the low correlation to other assets such as gold, silver, commodity stocks to be crypto's most appealing characteristic. Financial 74% of financial advisors and 80% of family offices reportedly view the feature of digital assets most favorably. Now, I know this article was seemingly redundant from the last article, and the reason I put it that way is because you're hearing and you're reading constant articles over and over again that's telling you that you have these endowments, family offices, financial advisors. If you want to go to a financial advisor, you can actually go to cfp.net, find one in your area. You have big institutions getting into cryptocurrencies. And yes, like me and Mike stated before, cryptocurrencies do have their roadblocks, do have bumps in the road in terms of safety for not being hacked, in terms of excuse me, in terms of custody solutions. People want to feel safe. Yes, those are there. They need to be addressed, but that does not negate the fact that these institutions and so forth are getting into crypto. You have any hey Mike, are you there?
Yeah, I'm here.
Hey, can you I need to get some more can you give me like 2 minutes? Uh
Yeah, I'll take the next article.
okay.
All right, this one is actually not on the list, but it's from newsbtc.com. Forgot to send this one in. High-profile Indian government official calls Bitcoin a Ponzi scheme. Cryptocurrencies like Bitcoin are are a Ponzi scheme and deserve to be banned to protect investors, at least according to Anagwar Agrawal, the Joint Secretary for India's Ministry of Corporate Affairs, accused Bitcoin of simplifying financial frauds in the Indian markets. He said authorities were in favor of banning Bitcoin, adding fuel to rumors indicating the Indian government's likelihood of drafting an anti-Bitcoin bill. Agarwal is also the CEO of Investor Education and Protection Fund, a government-appointed organization that protects investors' rights. The official's tenure has seen investigations against companies accused of defrauding investors. His views could prove instrumental in the ongoing Supreme Court case to determine whether or not the Indian government should legalize cryptocurrencies. When it comes to investor protection, the IEPFA has to take a stand against certain things, against Ponzi schemes. We are taking a stand. We think that cryptocurrency is a Ponzi scheme and it should be banned. Agarwal clarified his stance. Bitcoin and any other form of cryptocurrency trading remain banned in India, according to a circular released by the Reserve Bank of India, RBI, last year. The Indian crypto community, in its response, dragged the central bank to the court, accusing it of partial, grammatically wrong here, accusing it of partial behavior towards an industry that is otherwise booming across the globe. The matter is now pending in the Supreme Court of India since the July 2018. The next hearing is on July 23rd, 2019, which should conclude the case. The government will likely submit its draft via the RBI in the Supreme Court in the next Supreme Court hearing. The opposition would get a chance to challenge its content, especially for technical inaccuracies related to Bitcoin's comparison with a Ponzi scheme. Per the definition, a Ponzi scheme is a fraudulent investment operation where the operator generates returns for older investors through revenue paid by new investors, rather than from legitimate business activities or profit of financial trading. Bitcoin somewhat fits the definition of a Ponzi scheme. It generates returns based on higher adoption rate, but works without an operator. It sounds like the Manosphere 2.0. One can argue that Satoshi Nakamoto is the primary Ponzi administrator, but the fact that she never held adequate funds to crash the market signifies that the Bitcoin is far from being a fraudulent multi-level marketing operation. Moreover, Bitcoin's utility as a decentralized, cheaper than PayPal payment protocol is a solid use case. Such a feature generally lacks a typical Ponzi scheme. This is interesting because I believe India is probably doing this because they are trying to protect the rupee. For those you don't know, the rupee is the Indian dollar, and the rupee is almost never worth anything. It basically it doesn't really have any value outside of India for the most part. Although it has traded higher in the last quarter or so against the U.S. dollar, for the most part, it doesn't really have any value. Now, you take something like a cryptocurrency like Bitcoin that is worth 10 times as much as a rupee, and that becomes scary because now you don't have your nation state currency really doesn't have any value because it has no leverage outside of India. And then within the country, if people are trading cryptocurrencies and not using the rupee, then it really has no. It's not going to have any long-term value. It could spiral the value the currency out of control. It'll be in free fall.
Yeah, I agree. India is one of them countries where you hear constantly that the official government officials are saying Bitcoin is this. Don't invest in Bitcoin. We're banning this. I think last year someone tried to put a Bitcoin ATM machine somewhere in India, and the police confiscated it like a day later.
Mhm.
So yeah, India is one of them countries that you constantly hear what the government saying negative things about Bitcoin. I do agree with you. People that live in India, when they see that you can invest in this crypto and you can hold it safely within your own home and it goes up in value, while your rupee, Indian rupee, is declining in value, that's a hedge against inflation. Yeah.
Mhm.
All right, let's get to this next one here. Share my screen. All right. Next topic on the docket comes from Cointelegraph. Intercontinental Exchange used quote unquote crypto winter to scoop up digital assets for backed. Intercontinental, Intercontinental Exchange, or ICE, reportedly took advantage of the crypto winter to purchase crypto assets at a discount for its institutional cryptocurrency trading platform, BACK, Reuters reported on May 2nd. ICE's chief executive officer, Jeremy Sprecher, reportedly told Reuters that it's really been helpful that the cryptocurrency industry sort of went into what they call a winter. 2018 was a bear year for digital currencies. In mid November, crypto markets suffered sharp double digit losses, bringing Bitcoin below $5,600 for the first time that year. Back, which was originally set to roll out in January 2019, subsequently delayed the launch due to the ongoing consultations with the United States Commodities Future Trading Commission, or CFTC. In early February, Sprecher said that he expects back to launch later in 2019. In the recent interview with Reuters, Sprecher said that all that time, ICE has been hiring on talent, including through acquisitions. Quote, we've actually looked at a number of different companies and acquired a company earlier this week that wouldn't have been available to us if the market had been really hot, end quote. On Monday, Cointelegraph reported that BAC acquired cryptocurrency custodian service company Digital Asset Custody Company. The firm also revealed that it had filed an application with the New York Department of Financial Services to operate a trust company, which will enable the firm to serve as a qualified custodian for digital assets. Again, we hear that word custodian. In previous months, BAC saw an array of important hires from with former engineering executives at PayPal, and Google, Mike Blandina, joining the company as its chief product officer. Former cybersecurity expert at IBM, Cisco, and Endgame, Tom Noonan, becoming the chairman of BAC's board of directors, as well as Coinbase veteran Adam White being appointed as BAC's COO and head of institutional custody and traded products. Hmm. So it seems like, okay, if for those that don't know, the Intercontinental Exchange it's the parent company of the New York Stock Exchange, and also BAC, which is a cryptocurrency platform for institutions, is a subsidiary of the Intercontinental Exchange, or ICE. So ICE holds it's the parent will be the parent company of both is the parent company of both BAC and the New York Stock Exchange. The New York Stock Exchange is the top exchange in the world. So you have this top exchange get into the crypto market in essence. He said that they used 2018 as a year to accumulate cryptos. You can very much assume they accumulated Bitcoin, Ethereum, XRP, Litecoin, and any other top or quote unquote blue chip cryptos that are on the market. And not only that, but he also stated that they used 2018 to purchase companies that they otherwise would not been able to purchase if the crypto market was hot. Um, Also, you hear a lot of companies, FYI, side note here, you also hear a lot of crypto companies that are having financial problems because of this bear market. So with that, you have these whales and traditional markets soaking them up, buying them up, and also that they also spent 2018 hiring high qualified individuals and other engineers to what's word look for some tip of my tongue, I apologize, to put on their back platform in order to make their platform more, to bolster their platform. Is what I'm trying to say here. You got thing, anything you want to say about this one, Mike?
No.
All right, let's get to our next article. Okay, let me share my screen here. All right, let's switch gears to see what's going on actually in the cryptocurrency, cryptocurrencies themselves. This one comes from dailyhodl.com. Title: 10 financial institutions already using XRP, says Ripple's global head of banking. Ripple's global head of banking, Margin Delatine, says 10 financial institutions are using XRP to power cross-border payments. At the Paris Blockchain Week Summit, Delatine talked about the adoption of the digital asset and why smaller financial firms are more likely to be early adopters of crypto. Quote, corresponding banking is a very complicated process and creates lots of costs. Most and this is very important for those that are listening. What I'm about to read is very important for you all to see the other benefits of XRP. I'll reread this quote from the beginning. Corresponding banking is a very complicated process and creates lots of costs. Most of the costs are related to management of the liquidity, and this means billions or trillions of money trapped in accounts in order to move funds globally because of the SWIFT system. These accounts are known as Nostra Vostra accounts, if you all don't know. And I think the way that we see the use case of the crypto asset, in this case XRP, which is a product which is live, is around how you can source on demand liquidity. This has a big influence, especially for not necessarily big banks, because they have obviously a different range of capital, but smaller institutions that pay a lot for maintaining capital in the destination account in a Nostra Vostra relationship, as we call it. They are struggling actually with these costs, especially with the regulator requirements. So clearly, the use case that we see is, rather than maintaining even accounts or funds in the destination currency, how you can use crypto assets, in this case XRP, to source on demand liquidity when you need it and at a cheaper price. The product went live at the end of last year. We do have 10 financial institutions that actively are using that, and the volume is increasingly actually coming every day. End quote. Ripple launched X Rapid in October of last year. It uses XRP to power global payments. A total of 13 companies have publicly revealed that they are using or plan to adopt X Rapid in the future. The latest addition is Euro XM Bank, which says it plans to use the technology to move money across 80 countries. I want you all to remember that 80 countries. So the banks that are using X Rapid are EuroXM Bank, Bittrex, Bitso, Coins.ph, Bitstamp, Collex, Mercury FX, Catalyst, SBI Virtual Currencies. SBI Virtual Currency is very large in Japan. IDT, via Via Maricus, Sinfran, and BitTrue. So the quote stated that I'll just paraphrase the quote. In order for you to send money currently doing a Swift using the Swift using the Swift system, you have to hold what's called a Nostrovostra account, where you have to have funds in that receiving country's bank in order to cover the money that you want to send. That means you have, like the quote said, billions and trillions tied up in foreign banks that you can then use in your own country for infrastructure, for doing what you need to do. But because of these funds are tied up in other banks in foreign countries, those banks then charge you, the government, to hold money in their banks. So now you're paying a fee to hold money in these Nostra Vostra accounts in these other banks. Now, it's just not just one country, because as the article said, that one institution is going to use X Rapid to send money to 80 countries, over to about 80 countries. That means you're holding Nostra Vostra accounts in dozens of countries. And the money that is tied up equals billions and even trillions of dollars tied up in foreign banks because of sending money cross borders using the current cross-border payment system SWIFT with XRP and XRapid. What that does is allows you to take your money out of those Nostra Vostra bank accounts and bring it back home with XRapid. And I know the common thought is, cryptos is too volatile to send money cross border. With the speed at which XRP the speed at which XRP has with the XRapid system to send money across border, it will negate the volatility of cryptos because it happens in seconds, less than the volatility. So what happens is, if you want to send $3 million to Singapore, then it'll get there the same day. It won't take 24, 40, or even 72 hours, depending on when you send it. You send it the same day, and you don't have to have money located in Singapore's bank account. So that is the positive of XRP in this case. You got any comments on that one, Mike?
No.
All right, let's get to our next topic on the docket. All right, this next one comes from CoinDesk. Tokenized security exchange Currency.com launches to the public. That is a great domain name. Belarus-based tokenized security exchange Currency.com It has announced it is launching to the public today after a spell in beta mode since January. The platform, which claims to be the world's first such exchange, allows investors to directly trade and invest in tokenized financial instruments, with payment being made directly in Bitcoin or Ethereum. Currency.com has also launched an app for both iOS and Android, allowing users to access the exchange on the go. Other features added for the launch include 50% migration, closeouts, and selling at loss. Ivan Goldwyn, CEO of Currency.com, said, I quote, "The arrival of tokenized securities will completely change how investors can use their cryptocurrencies. Linking crypto to the price of stocks and shares provides a tangible way for holders of Bitcoin and Ethereum to access traditional financial markets." End quote. The exchange says it has 1,000 tokenized securities to offer investors worldwide, with the exclusion of those in the US and on the Financial Action Task Force's blacklist of high-risk nations. Its UK Financial Conduct Authority and Cyprus Securities and Exchange Commission related sister firm, Capital.com, provides the underlying technology of the platform. The exchange explained in the announcement that its tokenized products track the underlying market price of common financial instruments such as global equities, indices, and commodities. For example, users can buy a token that mirrors the performance of an Apple share on the NASDAQ at the same economic costs and benefits of an Apple share, it explained. According to a piece in TechCrunch, Currency.com has also today launched a tokenized Belarus government bond, with plans to add more government and corporate bonds going forward. The firm has previously said it's a fully compliant blockchain businesses under Belarusian law and follows anti-money laundering and know your customer rules, as well as the EU's general data protection regulations. As per the announcement, Currency.com is already trading over 20 million monthly, with 5,000 users having successfully registered for the beta announced on January 15th. The platform may be the first to launch for trading in tokenized securities with cryptos as payment, but Gibraltar Stock Exchange announced that it would list tokenized stocks in early April. The Singapore Exchange said last summer that it was also planning a similar platform, while the Swiss SIX Exchange has its in development already. All right, so we have a tokenized exchange, and what they're doing with tokenized security exchange, currency.com, launches to the public. That's the name of the title. So what they're doing is taking the underlying technology such as blockchain and tokenizing securities such as the Apple, Tesla stock, Ford, um, AT&T, Coca-Cola, stocks like that, and even bonds. And they're tokenizing it just like Bitcoin, Ethereum, such and such. These cryptocurrencies are tokenized, and they're allowing people to purchase these assets with Bitcoin and Ethereum, such as currency.com. We've actually went over stories in the past of other platforms doing this, such as the S Exchange and Abra, using the Abra app. But currency.com, they're doing the same thing. But also, what they're doing is when you purchase, they'll do it in a smart contract. So when you purchase a smart contract that's tied to the price, the real world price of Apple and the Tesla stocks, these traditional stocks, then what you purchase will perform just like one to one as the traditional stock. So that's how they're tokenizing the stocks as of right now. That's not to say that it will continue to be that way in the future, but as of right now, that's how they're advancing this blockchain slash crypto sphere by tokenizing stocks. So that is exactly what that article is dictating. It's actually is really cool. I like that it. I like that they're doing it. Um, so many times we hear, if you all don't know what rehypothecation is when an exchange, a traditional stock exchange, sells more of the stock that they have on hand. So they sell, one stock twice. So they've been caught red. A lot of exchanges have been caught red-handed with rehypothecation, but with this blockchain technology, that's not to say that it'll eradicate it 100%, but it'll just make it harder because if they use blockchain and not hyperledger with blockchain, it forces them to be transparent. So it's a good thing, in my opinion, that they're doing this and say the wrong word, tokenizing these securities, and it makes it easier, and it opens up a lot of the people that are investing in cryptocurrencies are millennials and now zennials because they're coming of age, and it opens up more liquidity into a market because you're now opening investing opportunities to a group of people that would not normally invest in traditional stocks. And now you're presenting it to them in a way that is hip, new, and something they're familiar with. You got any points on this one, Mike?
No.
All right, so let's get to our next article. Our next article comes from CoinDesk. Code for Ethereum's proof of stake blockchain to be finalized next month. Code for Ethereum's highly anticipated proof of stake or POS blockchain is on course to be finalized as early as sometime next month. In a bi-weekly call between Ethereum developers, Ethereum Foundation researcher Justin Drake said that code specifications for the first phase of Ethereum's transition to a proof of stake network are on track to be finalized by June 30th. Such specifications are effectively blueprints for developers looking to work on Ethereum's next generation blockchain. I've been continuing to fine comb past zero, phase zero, in preparation for the spec freeze, which we're targeting for the June 30th. Drake remarked on the call. We're still very much on track. Still, code simplifications are coming through, which is great, and the process of fine combing is also for finding final bugs. Ethereum has been inching toward a major upgrade dubbed Ethereum 2.0, which will radically change how the 17 billion network creates blocks and verifies transactions. As explained by founder of Ethereum Vitalik Buterin in a recent interview at Ethereum conference, ETH Cape Town, Ethereum 2.0 has two major flagship components. One is Casper, which is our proof of stake algorithm, which replaces mining or proof of work with something that we consider to be much more efficient, Buterin said at the time. The second part is sharding, which is this massive scalability improvement, which happens because you don't need every computer in the network to process every transaction in the network anymore. Buterin added that with sharding, he anticipates a 1,000 factor increase in scalability to the network. However, sharding will only come in the later two phases of Ethereum 2.0 rollout. The first phase, dubbed Phase 0, strictly launches Ethereum's new proof of stake blockchain. Now, the really, excuse me, this second, it's not really having to do with what I really want to talk about here. The, it's what proof of stake and Ethereum going from proof of work to proof of stake. Ethereum, wow, Ethereum is currently in proof of work, and what proof of stake is you put however many of that cryptocurrency, in this case Ethereum, if you hold Ethereum, then you put it on a wallet and commit to holding it in a wallet to for the purposes of forging a block to Ethereum's blockchain. Proof of stake, I don't know how Ethereum will do it, but proof of stake is biased towards those who hold more Ethereum, such as thousands and thousands of Ethereum. The minimum that, from last time I read, the minimum Ethereum you must hold to participate in proof of stake is 32 ETH. Like I said, proof of stake is biased toward those who hold more Ethereum. So the algorithm or consensus protocol will be biased toward those who hold more to have them forge block on Ethereum's blockchain. The thing is, last time I read is that yes, in order to you do get paid to forge blocks on a blockchain with proof of stake, but if you don't hold as much, then the ROI on what you hold and what you will forge may not be that much. So you may not be able to make a living depending on how much ETH you hold. So that's what is good that Ethereum's going to a proof of stake protocol. It means that, in my opinion, that is, it means that people have the opportunity to receive some fractions. You won't, I don't think you'll receive a whole ether. You may receive a fraction, but I have to be do more research on that. But you will get paid to forge a block 2 Ethereum's blockchain with the proof of stake protocol. And that's what it is. So people are looking forward to this because as Ether goes up in price, as any coin goes up in price, that any coin that's on a proof of stake consensus protocol goes up in price, what you get paid is what you cash out if you want to cash out. And when you cash out at that price of what that token is. So if Ether goes back up to X amount, then you cash out and so forth. So I hope I explained that correctly for those that are listening. If not, you can always ask further clarification. But yeah, me personally, I'm excited that Ethereum is going to proof of stake. Um, I want to see what that's like. This sharding, I want to see what that's like. I am so many people that talk about proof of stake that it may have a bad uh thought in your mind, but proof of stake, yeah. And CR Frank says 5% earnings, which I hit 32 ETH laying around. Yeah, that's the last I read. It was 5% of it's a 5% ROI each year, and like I said, you need 32 ETH minimum to participate in a proof of stake protocol with Ethereum. Mike Reggie says proof of work feels more honest, but I would like to hold for profit. So people have their reasoning as to why they prefer proof of work over proof of stake. So yeah, you have any comments on this one, Mike?
No.
All right, let's get to the last topic. Well, next to last topic on the docket. All right, this one is exciting actually. This one comes from Forbes. Cardano founder launches enterprise blockchain framework in collaboration with the Ethiopian government. Former Ethereum co-founder, founder of Cardano, and CEO of IOHK, Charles Hoskinson, announced the launch of an enterprise blockchain framework that aims to provide financial services to billions of people living in African countries. Known as Atala, named after a butterfly that resides in Florida, which I don't know why you would name it that, IOHK's framework is intended to serve as a solutions provider for developers, companies, and governments looking to implement new products. Quote, Atala is an enterprise framework similar to a Hyperledger Fabric. However, the point is to be a solutions provider for governments in need of a municipal currency or a supply chain management system. This requires a type of framework that serves as libraries and modules that would allow governments to rapidly and build a product for end users, Hoskinson told me, end quote. While Atala is similar to the open source blockchain framework, Hyperledger, which is used by IBM Blockchain, the solution takes a different approach by focusing less on Fortune 500 companies and more on governments in developing countries. The framework has been built from the ground up for real world use cases such as a property registration, voting systems, and supply chain management. Moreover, unlike other enterprises, blockchain frameworks that are cryptocurrency neutral, Atala focuses on digital currency adoption. According to Hoskinson, Atala will first be used in collaboration with the government of Ethiopia to develop a new cryptocurrency to provide a secure and dependable means of payment for the nation's capital. Quote, while we have ser- while we have several MOUs signed, the most prominent of which are going to be built in a utility currency for Ethiopia's capital, Addis Ababa. We are working with the Ethiopian government to create a new digital payment system that will allow 6 million users to pay their power and electric bills with cryptocurrency. We want to eventually combine this with an identity card, said Hoskinson. While Ethiopia's government will be one of the first to use Atala, the framework will also be introduced in other African countries that lack legacy infrastructure with a focus on enabling a new smart economy. Additionally, Hoskinson noted that Atala will service other enterprise industries seeking blockchain adoption. We are trying to find the correct product market fit at this time, but I can also say that we have signed an MOU with a major shoemaker for counterfeiting, Hoskinson revealed, solving solving the problem of blockchain interoperability. Another primary goal of Atala is to seamlessly move user value between different blockchains. Currently, blockchain systems lack interoperability, which Hoskinson believes is a problematic, especially for enterprises. Quote, there needs to be more of a discussion about blurring the line between a permission ledger, enterprise ledger, and a permissionless system. We need to talk about this as one spectrum and seamlessly move user value between the two. For instance, you don't want to alert users they are leaving the Cardano blockchain and entering Ethereum. You just want them to have a seamless experience. What we need is focus on moving data, actors, and value between these systems so users can move between an exchange and open ledger. End quote. Moreover, Hoskinson noted that blockchain interoperability is needed in order to facilitate mass adoption of the technology. For example, IOHK is looking at developing new tracking and traceability solutions for Ethiopia's agricultural supply chain. However, blockchain interoperability is an important element required. Quote, the only way we get 15 million farmers in Ethiopia into a cryptocurrency like system is to first get them into a supply chain system. The farmers need to be in a supply chain system to adhere to international mandates. Many of these people have no desire to use cryptocurrency, but once they are in a supply chain, they are in a network. And if that is interoperable with Cardano, for instance, we can build a product that can touch 15 million people, Hoskinson said. End quote. So, Cardano founder launches enterprise blockchain framework for collaboration with Ethiopian government. What this says to me is what Cardano's founder John Hoskins is trying to do is create a what's the word I'm looking for here? A for, I'll use framework that the Ethiopian government can use to conduct different type of businesses such as land registration, voting, paying your bills, electric bills. I'm just quoting from the article from right now. Doing different things that's tailored to the Ethiopian government. And also it can be expandable to just like I read at the end of the article to farmers. It can be a supply chain. It can be so many things for not just the African government. This can be tailored to other governments also, but it's good that they target to the African governments because it is said that the two continents that need crypto the most and that will carry crypto into adoption is South America and Africa. So you see a lot of cryptocurrencies targeting a lot of these two continents and the countries in them. But this can be tailored to the Ethiopian government, which will allow them to be more efficient to and I'm going to say taxes, but allow them to be their government to be more efficient. So that's I see this as a plus in my opinion.
Yeah, I don't see anything wrong with this. This is actually a bonus and a benefit for the Ethiopian government because once one country in Africa establishes a framework, most other countries start to adopt similar policies. So Ethiopia is probably the most stable country on the continent um, in regards to civility. So especially in banking, so they don't really have all these other problems like Egypt and Nigeria and South Africa and all these other countries. They didn't have to really deal with white colonialism. So that being said, Ethiopia is an actual perfect test ground for anything any cryptocurrencies or digital infrastructure.
Yeah, yeah, yeah. I want to read some comments in the chat before I move to the last one. Mike Rizzi said that asks, how does China do these altcoins like Power Ledger? China China says they ban cryptos. It's not nothing against the books, but they prevent. I know I read an article saying that they prevented merchants from using crypto in WeChat, and we all know WeChat is a social media platform that the Chinese government uses to spy on people. So China isn't friendly to cryptos. Cryptos are not friendly in China. So Power Ledger, which is a crypto that's really based out of Australia, I don't know how they would feel with that. I haven't heard of anything with the Power Ledger blockchain having to do anything in Australia. So, I mean, we'll see in the future as crypto progresses. He also says that it's amazing the blueprint societal structure that's organized. Yeah. Uh huh. Mike, do you have the link for Nagon?
Um, let me see. Let me send it to him. I thought he was on the hangout.
So yeah. So, oh, go ahead.
No, I was just going to say that China is safeguarding their. I mean, they have the Great Firewall of China, so it'll be difficult for you to get any sort of cryptocurrency activity going on inside their network. So
Yeah, yeah. So let me share my screen, and if Nagon comes in, we open up the floor because this will be the last one. This was particularly on the docket, but since it's been going on, this one comes from Bitcoinist.com, titled "Bitcoin Price Reclaims 6K for the First Time in 6 months." I'll read the article, but there's two things in here that I want to point out that we always talk about on Brain Trust on our Economic Fridays. Bitcoin price continued to post record highs in 2019, breaking the key $6,000 level not seen since mid-November plunge. More evidence of a new bull market. Bitcoin price $6,130 has broken key resistance of $6,000 to reach as hmm, okay to reach as high as $6,077 on Bitstamp on about 15 billion in trading value. BTC USD also marked an impressive 40% gain since the start of the year to outperform the S&P 500 commodities and oil. I like that they have this price right here tied to the actual Bitcoin price. All right, so as we see on um, the chart, you see this big green candlestick, and it's been going up from that snapshot right there. Continue reading. It also suggests that Bitcoin appears completely unaffected by the Binance hack as the CEO toyed around with the idea of reorg. I'll hit on that to much backlash. What's more, many commentators were even shocked that the idea was even being discussed. In other words, price is showing new signs of strength as the inability of the world's biggest players to affect Bitcoin in any way becomes increasingly apparent. The idea brought back memories of the New York Agreement in late 2017, backed the biggest cryptocurrency companies. The defeat of its proposed change was a major win for Bitcoin users, proving that it is they who are ultimately in control. In retrospect, this was a critical event at the time that partially staged for Bitcoin's meteoric rise, breaking 6,000 from the other direction. Rising institutional interest, the key return of Korea's kimchi premium, and Chinese traders paying a markup for tethers, allowing easier access for crypto markets, are among other factors driving the current uptrend. On the technical side, as noted earlier by Bitcoiners this week, a test of 6,000 was not unexpected, but passing this key level upon the first attempt is an encouraging sign. Bitcoin's senior market analyst, Philip, adds that passing such a psychological number could keep the momentum going, who said, and I quote, "It will be highly unusual not to go higher after breaking a big level like 6K." Moreover, it was the 6,000 last year that held as strong support for months until finally giving in mid-December, plunging to its yearly low. Therefore, breaking 6K level this time from the other direction could be just as crucial as confirming a new bull market. Bitcoin stronger in 2019 than ever. Meanwhile, Bitcoin's fundamentals are stronger than ever with record highs across key metrics such as on-chain transactions, hash rate, block size. The halving 300 days away may already put may already be putting upward pressure on price. Also worth noting is the lack of media hype compared to the end of 2017. This may suggest that the market is now more mature, not as hype driven, and much more robust this time around. Overall, BTC still has a pair 70 to pair 70% to revisit the 20,000 all-time high. But while it's still too early to proclaim a new bull market, breaking 6,000 is a huge boost for the bulls in 2019 that has even bearish traders now changing their tune. The total cryptocurrency market cap is now just under 190 billion, while the Bitcoin dominance index has risen to 57%. There's a few things in this I want to get to. That one was the reorg that it touched on in this paragraph right here, and I highlighted for you all to who all is reading on the screen. It also suggests that Bitcoin appears completely unaffected by the Binance hack, as the CEO toyed around with the idea of a reorg. Too much backlash. What a reorg is, back in 2015, Ethereum had a DAO, which is a smart contract. What DAO? Smart contract, digital, decentralized autonomous organization. Someone exploited a flaw in that smart contract and drained the funds from their treasury. It was a big controversy. So what the Ethereum founders and coders did was they rolled back the blockchain to erase that hack. People, there was a then split in the community. Some coders said believe that the blockchain you cannot redo the blockchain. It's supposed to be immutable. The hack happened. You need to go forth. Some people say that's not fair. People lost their money. So what happened was from that point on, Ethereum Classic was made. That's why Ethereum Classic exists. If Binance and CZ or Changpeng Zhao would have reordered the Bitcoin blockchain, that would have would have made people lose all faith in Bitcoin because Bitcoin is supposed to be the number one, and it's supposed to be, excuse me, it's supposed to be non breakable, immutable. That people believe in Bitcoin, and if it would have been reordered, then I believe the price would have just completely crashed because they would have reordered and it would have erased the loss. Also, there's another. Well, these I might as well touch on these two articles. This first article is talking about the fundamentals. Rising institutional interest, the return of Korea's kimchi premium, and Chinese traders paying a markup for tethers. If you all don't know, Korea's kimchi premium, quote unquote kimchi premium, is just a premium that Koreans pay for Bitcoin. So if Bitcoin is $6,000 here, and Korea is going to be $6,100 or $6,300, they just pay a markup. Why? I specifically do not know. And this other point, the Chinese traders paying a markup for tethers. People speculate that Tether is still having that 24-hour volume of $12 billion or so. As we look at the markets right now, it's only this 24-hour volume is only second to Bitcoin. Its current 24-hour volume is 13 billion. It's only because Chinese. That's the only way Chinese can have access, or one of the only ways Chinese can have access to the American dollar, because Tether is tied to the American dollar. So that's probably people speculate that that's why Tether is still relevant, still number 7 on crypto, and still have that $13 billion 24-hour volume. And on the second paragraph, which is right here, this ties into technicals. I just thought it was funny that the one paragraph you had the fundamentals, second paragraph, you have the technicals. One that says on the technical side, as noted earlier by Bitcoiners this week, a test of $6,000 was not unexpected, but passing this key level upon the first attempt is an encouraging sign. Bitcoin senior market analyst Philip Phibb adds that passing such a psychological number could keep the momentum going. So I just thought that was, it was interesting they had those two together, pro fundamentals and technical analysis. And the last point in this article, which is right here in this paragraph, is the halving. 380 days away. If you all don't know, Bitcoin's rewards for those who mine Bitcoin proof of work, the reward they get is Bitcoin. So I think they get 12 or 12 and a half Bitcoins. And every 4 years, that rewards half. So the next halving is next year in 2020. The previous halving was in 2016. So with that halving, it's 12 Bitcoin. So with that halving, they'll now receive 6 Bitcoin. So people speculate each time Bitcoin halved, the price went up. So that's why this article is saying the halving 300 days away may already be putting upward pressure on price. So that's why when you hear that the halving, that's what it is. And people speculate each time the halving occurred, Bitcoin's price went up.
Yeah, that's kind of like for a stock where you have a 2-for-1 stock split. So, a coin like that would kind of, trade at a premium, so people would pay a little more because of the anticipation that it's going to, give you that much more,
Right.
in that period. So that's kind of what you're looking at. Very, very close to a stock, almost like a 2-for-1 split here.
Mm-hmm. How you doing today, Nego?
Pretty good, man. Pretty good. Mike, what happened with the link, man? I didn't get your link before. You guys send out links?
We sent out the link, but your name just wasn't on there for whatever reason. We have to clean up the distribution list.
My blacklisted.
No, the distribution list. It had quite a few dead emails in there. People terminated their emails, so they were getting a lot of bounce backs. So, we have to pay attention to what the market actually does in terms of the dollar. Because the crypto doesn't move without the dollar itself.
Mm-hmm.
The strength of the dollar is going to determine where your next where your next top 10 crypto is going to move, and as well as the euro, as well as the yen, because Southeast Asia is really hot for cryptos in South Korea and in Japan. So
Yeah. I see our Frank says, shout out to Korea. This is where I was introduced to crypto. He paid that kimchi premium.
I didn't see that.
Yeah. And I don't know, people want to know why they call it kimchi premium. Kimchi is a food. It's like it's fermented cabbage. So it's popular there. Like kimchi. Do you have any comments on anything to go?
As of right this second, no, not really. I know Mike did make a comment about, a lot of cryptos being tied to the dollar, and yeah, I would have to agree with that. You just have to be a little careful because, the dollar will go up and down for various reasons. Sometimes, we will lower it just to bring more, foreign investors in here for whatever reasons, but for whatever reason that will do that for us. So, be very careful. If it's tied to the dollar, because if you're not really looking at that closely, you could take a little bit of a bath or some losses. So you have to be very mindful of what's going on in the market, especially with respect to the currency exchanges. So that's a big thing there. So I just think Mike's dead on that, and you gotta watch that very closely.
Mm-hmm.
Yeah.
Yeah. I guess my final piece on this would be pay attention to Puerto Rico, Malta, and Africa now. Africa seems to be really moving at an accelerated pace in terms of cryptos because this new formation of policies on inter-Africa trade. So they're always looking for mechanisms that's going to allow for fast payments to all their goods and services on the ground. Because they lack, if they're trying to get around the SWIFT system, right? The SWIFT system is an archaic European Brussels-based system. Africa really does not need to do business with Europe through the SWIFT system. They can create their own hyper digital ledger and have a complete payment mechanism for African trade and goods. This is a huge time to get involved in fintech now.
Mm-hmm.
Big opportunities. Bob TV, welcome to the channel.
Oh yeah, welcome.
Black owned business TV. So that's what that stands for.
Yeah. If any, want to have any questions, throw them in the chat. Yeah, kimchi is good, Cigar Frank. You get the spicy, yeah.
I thought kimchi was some chick from Chicago.
Nah, it sound like it, but no. It just sound like it. Yeah. Put it over rice, yeah.
Now, do you want to talk about Aisha Curry right now, or?
What's up on that? What's up on that? Wow. Anyway.
No, we'll close out right now, and we'll see you guys tomorrow for economics, and continue to pick it up from there. But thank you all for joining us.
All right, y'all.